It's funny. When you think about those moments where like everything in history is hanging by a thread, like September 2008 has got to be right up there, doesn't it?
Yeah.
It was, staring into the abyss for sure. And, for this deep dive, what's really remarkable is that we have this treasure trove of firsthand accounts. We're talking over 500 hours of interviews,
Wow.
emails, recordings, you name it. I mean, this is unprecedented access to what was going on behind closed doors.
Yeah. And what's really interesting, to me at least, as we start to unpack this, is just how fast everything fell apart.
Yeah.
It was like blink and you missed it. So what we're going to do is walk you through those pivotal months, break down the key decisions, and I think more importantly, the insane pressure those decisions were made under. Because remember, this wasn't just some theoretical financial problem, right? This was about trillions of dollars disappearing.
Right.
And it really shook like the foundations of capitalism. I mean, think about that.
Well, it's almost hard to believe now, looking back at those early warning signs with the subprime mortgage market. Like, Ben Bernanke, March of '07,
Right.
testifying to Congress, he said, and I quote, "The impact on the broader economy and the financial markets of the problems in the subprime market seems likely to be contained."
I remember that.
I mean, wow.
Talk about a miscalculation, right? Because fast forward just a few months, August of that same year, poof,
Yeah.
the $2 trillion subprime market, it's gone. It imploded. And it was obvious. It was very obvious this was not contained. And we saw the consequences. Two Bear Stearns hedge funds went belly up. $1.6 billion gone. Investors lost everything. And then you have BNP Paribas, big European bank. They had to freeze withdrawals from some of their funds because, get this, they couldn't even figure out how to price their subprime bonds.
Wow.
Nobody was buying. I mean, at any reasonable price.
So that's really when the narrative shifted, right? Bear Stearns was no longer the only concern.
Exactly.
All eyes were on Lehman Brothers.
Right.
And it wasn't a question of if, but who and when. It was chilling. There was this note that Richard Bernstein from Merrill Lynch sent out. It said, "Bear Stearns' demise should probably be viewed as the first of many." He didn't name Lehman specifically, but come on.
Writing is on the wall.
Yeah. And you can bet Lehman was freaking out, scrambling to project an image of stability.
Oh, absolutely. They were in full-on damage control mode. So they've got Fuld, Gregory, Callan, their new CFO, and McDade. They're all on this conference call with a reporter, right? And Fuld, he's trying to, reassure everyone. We've got plenty of liquidity, he says. The Fed's lending window is open. He even goes so far as to say, people are betting the Fed can't stabilize the market, and I don't think that's a good bet.
Right, but the irony here, and this is something that maybe we don't fully appreciate looking back, is that they did have access to cash.
Yeah.
But taking those cheap loans from the Fed, that was like admitting you were in trouble.
It's the catch-22, right? Because nobody wanted to be the first one to blink, show any sign of weakness. I mean, that could set off a full-blown panic. So it's fascinating because the Fed, they were trying to calm the entire system, not bail out individual companies. And that's a crucial distinction I think a lot of people miss.
Yeah.
It was, a rising tide lifts all boats type of situation. But for Lehman, well, accepting that lifeline, that was a sign of weakness, and nobody wanted that stigma.
And what's interesting is that one of their own guys, Tony Russo, had presented this very strategy using the central bank's liquidity in times of stress.
Oh, yeah.
He gave a presentation at the World Economic Forum in Davos just a couple of months before.
That's right.
And guess who was in the audience?
Who?
Timothy Geithner,
No way.
who was then president of the New York Fed.
Wow.
So it's not like they were unaware of this tool, but the perception, that was the problem.
Exactly.
The perception of using it. So as we sort of get into Lehman's mindset here, you have to understand the guy at the top, Richard Fuld.
Oh, Dick Fuld. Okay.
Right. So take us into that world a little bit.
So, he came from money. His grandfather actually co-founded a textile company, United Merchants and Manufacturers. So, he wasn't born with a silver spoon, but maybe a silver-plated one. But the thing is, his path wasn't always smooth. There's this story about him getting kicked out of the ROTC program in college.
Oh, really?
Yeah, he got into it with his commanding officer.
Interesting.
And when he tried to explain his side of the story, you know what he was told.
I can't imagine.
No, there's only one side of the story. You got into a fight with your commanding officer. That's it.
Wow.
So, even back then, there was this stubbornness, I guess. Refusal to back down.
Interesting. And then he lands at Lehman. And even that wasn't supposed to be a permanent gig, right?
That's right. I mean, he was going to get his MBA, move on. But then he has this, encounter with his boss, Louis Glucksman. He asks Glucksman for a recommendation for business school.
Oh, that's got to be good.
And Glucksman, you know what he says. Why would you do that? I'm offering you a job here.
Okay.
But Fuld was like, not so sure about your management style, buddy. Glucksman was a yeller, apparently.
Yes.
But Glucksman, classic Wall Street, says, look, stay here and eventually you won't have to work for me.
Right.
So Fuld, he stays, gets his degree at night.
Pragmatic.
Yeah. And this all happens right as Robert Lehman, the grandson of one of the founders, passes away. Big shift for the firm. And they decide, hey, Goldman's killing it in corporate finance. We need to get into commercial paper trading. So who do they bring in to lead that charge?
Glucksman.
Glucksman. So Fuld's early years there, I mean, it's a time of big change at Lehman.
So what's Fuld's reputation like inside Lehman?
Oh, he was known as this, like, laser-focused trader, you know. There's a story. He's trying to get a trade signed by a supervisor, Alan Kaplan.
Okay.
Kaplan's on a phone call, ignoring him. Fuld just stands there frowning, waving the trade in his face until he gets Kaplan to sign.
Wow. So intense.
Very intense. And, you know, that intensity, it kind of propelled him up the ranks.
Right.
By the mid-90s, he's CEO, pushes out his predecessor, Richard Pettit, and he brings in Joe Gregory and another guy, Bradley Jack, as co-CEOs.
Okay.
But it's pretty clear Gregory's consolidating power, and Jack ends up sidelined. And it seems like Fuld really trusted Gregory, thought he could help him clean up the firm, you know, get rid of some of the internal rivalries.
Makes sense.
So initially, they cut costs like crazy, huge payroll reductions. But then Fuld does something interesting. He tries to smooth out his image. Becomes the Mr. Outside, all about that stock price. Gregory's the Mr. Inside COO, running the day-to-day. And get this, to really tie employees to the firm's success, they start paying them more and more in company stock.
Oh, interesting.
By the end, they own something like a third of the company.
Wow. And Gregory, he was the tough guy, right?
Oh, yeah. The enforcer.
Yeah.
Handled all the disciplinary stuff. They called him Darth Vader around the office.
I can see why.
There's even this, well, kind of unsettling story about how he treated his protege, Robert Shafir.
Oh, what happened?
Shafir was head of equities, you know, built that whole business. But in 2005, Gregory demotes him for no apparent reason, takes him off the executive committee, and then, to really rub it in, he gives Shafir an office right across from where the committee meets.
Ouch. That's cold.
It's brutal. And all this is happening while Shafir's daughter is seriously ill.
Oh, wow.
He takes some time off, thinking things might change, but when he gets back, nothing. Gregory never gives him a real role again. So, you know, that kind of intense leadership, I think that really shaped how they reacted when the crisis hit.
So now, it's spring of 2008. Lehman releases their earnings.
Right.
And initially, everyone's breathing a sigh of relief, right?
Yeah, the headlines were like, Lehman beats expectations, doomsayers confounded.
So what happened?
Well, Erin Callan, remember, the new CFO, she gives this very detailed presentation. She's talking about how they've reduced their leverage, increased their liquidity, and she knows what's on everyone's mind. Are they the next Bear Stearns? Can you trust their numbers? Are they cooking the books, engaging in mark-to-make-believe?
So explain that, mark-to-make-believe. What does that mean?
Basically, it's this fear that they're overstating the value of their assets.
Oh, I see.
Right. Like, imagine you've got a house worth $1 million, but the market crashes. You want it to still be worth $1 million, but it's not. So are you marking it to the market, or are you just pretending?
Right. So it's about transparency and honesty in valuations.
Exactly. And Callan, she's trying to be super transparent. She's giving all the details, trying to reassure everyone. And for a while, it works.
But not everyone's buying it, right?
No. Outside Lehman, people are starting to get really skeptical.
Right.
You've got Peter Schiff. He's saying, I don't believe their numbers. They're hiding their liabilities. These profits are phony.
Wow.
And then there's David Einhorn.
Oh, yeah, the hedge fund guy.
Big hedge fund guy. And he listens to that earnings call, and he's like, this is a house of cards.
Wow.
He's already betting against them, and he's about to go public with his whole analysis. And when Einhorn talks, people listen.
Yeah. So you've got Lehman projecting strength, but some very powerful people are seeing cracks in the foundation.
Big cracks.
So let's talk about Hank Paulson. He's arrived at Treasury.
Okay.
But he wasn't exactly jumping at this job, was he?
No, he had some doubts, but he had some heavy hitters in his corner. James Baker, his old pal John Bryan from Sara Lee.
I love that guy.
Right. And Bryan, he gave him this great line, Hank, life is not a dress rehearsal. You don't want to be 80 years old telling your grandkids you were asked to be Treasury Secretary. You want to tell them you did it.
So true.
Right. And Paulson, he had some experience in Washington. Early in his career, he worked at the Pentagon, even spent some time in the White House. Yeah, and one of his old colleagues said, he's got a good antenna for what's going on. He moved up the ranks quickly, from a junior position to the White House. And get this, even though he was in the Nixon administration, his name never came up in Watergate.
Wow. So he knew how to navigate those political waters.
Yeah, absolutely. And it seems like he sensed this crisis coming.
Early on.
Yeah. He tells two of his guys, Neil Kashkari and Phil Swoggle, start working on a break the glass plan. Like, what do we do if the whole system melts down?
Smart.
Right. And he starts talking to people on Wall Street, trying to get a handle on things. After Bear Stearns goes down, he calls up Dick Fuld.
Oh, that's got to be a tense conversation.
Oh, yeah. They're talking about the market volatility, Lehman's stock prices tanking, and Fuld, he's freaking out about short sellers, people betting against Lehman. He wants Paulson to get the SEC to stop them.
Classic Wall Street, right.
Yeah.
Blame the short sellers.
Exactly. But Fuld, he also has another idea, a big one.
What's that?
Warren Buffett.
Oh, wow.
Right. He knows Paulson's tight with Buffett. A Buffett investment, that would send a huge signal to the market.
It would.
And Paulson's like, yeah, that's not a bad idea. Go for it.
So what happens?
So Fuld and Aaron Callan, they call up Buffett. They're pitching him on Lehman, proposing a $3 to $5 billion investment.
Okay.
Buffett, being Buffett, he comes back with a counteroffer, preferred shares, 9% dividend, and warrants to buy Lehman stock at $40 a share.
Classic Buffett. High yield, low risk.
Exactly. Smart guy.
It is. Now, Paulson, he also brings in this guy, Bob Steele, as Undersecretary for Domestic Finance.
Oh, right.
He'd worked with Paulson at Goldman.
Yeah, they go way back. And Steele was actually running Goldman's equity capital markets group in London.
So he knew the markets.
Inside and out. Plus, he was a much better communicator than Paulson, apparently.
Really? Interesting.
Yeah, so he's a valuable addition to the team.
He is. And it's interesting to see how different these firms were. Like, you've got J.P. Morgan, run by Jamie Dimon. Everyone's praising their fortress balance sheet.
Yeah, Dimon was very conservative, very cautious. He understood risk.
Right.
And he steered clear of all those crazy off-balance sheet things that got other firms in trouble.
Right. And then you have places like Citigroup not doing so hot.
Not so hot.
So J.P. Morgan, they were built to withstand this.
Definitely. Now, while all this is going on, the Fed, under Bernanke, they're trying to figure out what to do. The market's going haywire. Bernanke cancels a trip. He's all hands on deck.
Wow.
They start lowering the discount rate, which is the rate banks pay to borrow from the Fed.
Okay.
They expand the types of collateral banks can use to get loans. But initially, they're not doing as much as Europe.
Interesting.
But then Bernanke, he realizes this is serious. So they do a bigger rate cut, hint at more to come.
Wow. So the Fed is trying to pump liquidity into the system, but back at Treasury, they're working on that break the glass plan.
Right. Kashkari, he presents this 10-page outline to Bernanke. And they're like, look, if we try to prevent a total meltdown, there's going to be a lot of pushback, political and legal.
Yeah.
So they knew they might not have all the tools. And even if they did, using them could be a nightmare.
Yeah.
So, back to Lehman, one thing's for sure. Dick Fuld, he hated bad press.
Oh, I remember that. Like,
Yeah.
really hated it.
Really hated it. So the Wall Street Journal, they run a follow-up piece by that same reporter. Craig, yeah. And Fuld goes ballistic, bans the entire firm from talking to the Journal, even has her seat at the table removed, whatever that means.
So dramatic.
Very dramatic. And, that's the kind of thing that can really hurt you in a crisis. You
Yeah.
can't just shut out criticism. It makes you look isolated, out of touch.
Exactly.
Andrew Gowers, their head of communications, he knew this was a bad move. But Fuld, he wasn't listening. He was in his own world.
Yeah.
So while all this is going down, Lehman's looking for a merger partner.
Right.
And there's some hope with Korea Development Bank. Their strategy guy, David Goldfarb, even emails, Korea situation sounds promising.
Okay.
But then he adds, my preference would be a Hank Greenberg or GE solution. Something more stable, more recognizable.
Right. Someone to come in and save the day. But that Korea deal, it falls apart.
It does. And what's interesting is that there were people inside Lehman sounding the alarm.
Oh, yeah?
Skip McGee, big shot at the firm, he tells Fuld straight up, you got to get rid of Joe, meaning Gregory.
Wow.
He's worried about Gregory's decisions, the risks they're taking.
That's a bold move, telling Fuld to fire his right-hand man.
It is, and he wasn't the only one. Michael Gelband, he ran fixed income, very successful guy. Back in '06, he tells Fuld, the good times won't last forever. We're not ready for a downturn.
Right.
And Fuld's response basically blows him off.
Wow.
And even earlier, February '07, Larry McCarthy, their top distressed debt trader, gives this presentation.
Okay.
He's talking about this domino effect. It starts with subprime, then spreads to commercial banks, then consumer borrowing. Oh, like a contagion.
Exactly. And he's saying everyone's being way too complacent. This is going to be bad.
So they had internal warnings, but
nobody listened, or at least they didn't act on them. And meanwhile, the rumors start flying.
right, people are wondering, what's going on at Lehman? Is anyone in charge?
Exactly. Charlie Gasparito, he's on CNBC grilling their spokesperson. Are Gregory and Callan getting fired?
I remember that.
Of course, they deny it, but the fact those rumors are out there, it's not a good sign.
No.
And then Skip McGee, he sends Fuld this email from a former exec in London, Benoit D'Angelin.
Oh, yeah. What does it say?
It's bad. He's saying the mood in London is awful, that senior management needs to change, that they need to admit they screwed up.
Wow.
He even says we can't keep saying we're great and the market just doesn't understand. Ouch. So what does Fuld do?
He promises to have lunch with the top bankers, hear them out.
Okay, but he's sticking with Gregory, right?
For now, but he's leaning more and more on Bart McDade, you know, the equities guy.
Mm-hmm.
After Bear Stearns almost goes under, Fuld basically makes McDade his risk guy.
Interesting. So McDade's the voice of reason now.
Maybe. He had a good reputation, honest, smart. You know, he'd actually run fixed income before being moved to equities.
Oh, yeah.
Yeah, some people thought that was Gregory's doing, sidelining a potential rival.
Wow, interesting. And all this time, there's this shakeup happening at other firms.
Right.
Paulson's shocked when John Thain leaves Goldman for the NYSE, and then, of course, Thain ends up at Merrill Lynch.
Yeah, he saw Merrill as a chance to run a big retail brokerage. He thought he could fix their balance sheet, make them a real player.
So what happened?
Well, some people thought he was too focused on his image, on the PR stuff.
Right.
And then Larry Fink, you know, the BlackRock guy,
Yeah.
he calls up Merrill furious.
Oh, why?
He thinks they're not raising enough capital, that their deals with sovereign wealth funds are terrible.
Ouch.
And on top of that, Merrill's CDO portfolio, it's imploding.
Those complex debt instruments, right?
Right. And then there's Stan O'Neill, Thain's predecessor. He starts talking merger with Wachovia without authorization.
Wow.
It's a mess. He ends up getting forced out.
Wow. And then there's AIG.
Oh, yeah, AIG.
Another giant in trouble.
Big trouble.
Yeah.
And it's actually Jamie Dimon who encourages Robert Willemstad to take the CEO job.
Ironic.
Very ironic. And Willemstad's wife is all for it. She thinks he got screwed over at Citigroup.
Interesting.
So Willemstad, he takes over, and he doesn't mess around. He tells Martin Sullivan, the outgoing CEO, the board's going to discuss your future at the next meeting.
Wow. Right to the point.
Yeah. And then he starts looking at the numbers, and he's horrified.
Bye.
The potential payouts from all those mortgage defaults, it's astronomical.
Yeah.
So he calls up PwC in secret to go over the books of their financial products unit.
Smart move.
Right, and they find a bunch of problems, accounting issues. The losses are way bigger than anyone thought. And Willemstad, he's stuck with Joe Cassano, the guy who ran that unit.
What happens with them?
He keeps him on as a consultant, $1 million a month.
$1 million a month.
Yeah, but he limits his role. And then there's this whole thing with the retention bonuses.
Oh, yeah. The $165 million for the financial products division.
Right. The board approves it. Nobody thinks it's a big deal at the time, but it comes back to bite them later.
It does.
Big time. And then Willemstad has this awkward meeting with investors. He can't tell them anything because they're still trying to raise capital.
Right.
It's a mess. So you've got AIG in crisis mode, Merrill imploding, and Lehman still searching for a savior.
Right. So while all that's happening, Lloyd Blankfein's taken over at Goldman. They'd had a rough time in Russia, but he's determined to make it work.
Third time's the charm, right?
Right.
There's this weird story about a Goldman board meeting in Moscow at the Hotel Astoria.
Oh, yeah. What's so weird about that?
Well, apparently that's the same hotel Hitler planned to use for his victory party if he'd taken Moscow.
Wow, what a weird bit of history.
Right. Kind of sets the mood, doesn't it?
It does.
So, Blankfein's rise, it wasn't without its drama. John Winkelried, he gets passed over for some top jobs and ends up leaving Goldman. Blankfein takes over some of his responsibilities, becomes co-president under Paulson.
Right.
And then, you know, Thain leaves, and when Paulson goes to Treasury, guess who becomes CEO?
Blankfein.
Blankfein. And get this, around this time, he starts shaving, loses weight, quits smoking, like a whole new man.
A makeover.
Yeah. So you've got this new generation of leaders at these firms, and they're all walking into a financial hurricane.
So let's talk about Paulson's strategy at Treasury.
Okay.
He does something pretty risky.
He does. He basically announces that the government doesn't have the power to stop a major financial institution from failing.
Wow, bold move.
Very bold. I mean, that could easily backfire, right?
Yeah.
Make people even more scared.
Yeah.
But he thinks it's necessary. And then he goes to Moscow to talk about best practices for sovereign wealth funds.
Right.
But while he's there, he also meets with the Goldman board.
Oh, yeah.
They're in town, too.
So a little side meeting?
Yeah, purely social, they say. But his own team's worried about the optics of that.
I bet.
Right, like what are people going to think?
Yeah.
And after the meeting, Blankfein tells another Goldman guy that Paulson said, it can only get worse.
Wow, that's not reassuring.
Not at all. So back in the U.S., the pressure on Lehman is building.
Right.
Bart McDade, remember, Fuld's risk guy, he does something pretty surprising.
What's that?
He tells Fuld to rehire Michael Gelband and Alex Turk.
Those are the guys Gregory pushed out.
Exactly. They were the naysayers, always warning about risk.
Right. So McDade's basically saying, we need to hear these guys.
Yeah, like, we need a reality check. And meanwhile, Paulson's starting to get really worried about Fannie and Freddie.
Oh, yeah, the government-sponsored mortgage giants.
Right. And he's not buying the reassurances from their regulator. He thinks they're way more dangerous than Lehman.
Really?
Yeah, he thinks they could bring the whole system down.
Wow.
So their market value is plummeting, and it's like a test. How much will the government let things fall apart before they step in?
Right. So what does Paulson do?
He calls up Fuld again, but then, as he's having breakfast with Bernanke, they get some bad news. Fannie and Freddie's stock is tanking.
Oh, because of...
A negative article in the New York Times.
Oh, great.
People are drawing comparisons to Bear Stearns, thinking, are they next for a bailout?
Right.
So Paulson, he puts out a statement. We support Fannie and Freddie in their current form.
Trying to calm things down.
Right. Then he briefs President Bush, but the stock keeps falling.
So he needs to do something more.
He does. He starts calling Congress. I need the power to put money into Fannie and Freddie or backstop their debt.
Big ask.
Huge ask. And then, to top it all off, Sheila Bair from the FDIC, she tells Paulson they're about to seize IndyMac.
Another big bank failure.
Yeah, a bad sign. So Paulson, he's like, okay, we need a plan, and we need it now. So he calls his team in. We got to stabilize Fannie and Freddie by Monday, before the Asian markets open.
Pressure's on.
Big time. And while all this is happening, Lehman is still scrambling to find a merger. Fuld meets with John Mack from Morgan Stanley.
At his house, right?
Yeah, at his house. But it goes terribly. Fuld starts talking about poaching Morgan Stanley staff.
Oh, come on.
Not a good look. The Morgan Stanley guys are like, what is he talking about? He's delusional.
Yeah, that's not how you make friends.
Nope. So no deal. Fuld then calls Gaithner at the NY Fed, and his lawyer, Rajan Cohen, has an idea.
Okay, what's the idea?
Turn Lehman into a bank holding company.
Oh, interesting.
Yeah, that would give them access to the Fed's discount window. But it also means more regulation.
Right.
So Cohen calls up Ken Curl at Bank of America, sees if they're interested in buying Lehman. But Curl's not biting.
Not a good sign.
Not good.
Yeah.
So Paulson, he's getting desperate. He calls up his old Goldman buddy, Ken Wilson, asks him to come help out at Treasury.
Like a consultant.
Yeah, $1 a year man, they called it. Paulson needed someone he could trust.
Makes sense.
Meanwhile, Lehman's own board meeting is a disaster.
Oh.
Gary Parr from Lazard, he's presenting their options, and Fuld cuts him off. Then he calls Parr afterward and yells at him.
Wow. So Fuld's not exactly open to feedback at this point.
Not at all. He's losing it. Paulson, he's still worried about Lehman.
Yeah.
He sets up a secret meeting between Fuld and Ken Lewis, the Bank of America CEO at the NY Fed.
Okay.
But he tells Fuld, look, I'm not going to call Lewis and tell him to buy you.
Right.
Fuld's not happy. Should we be too surprised? He says, remember this, though I will.
Ominous.
Very ominous. So while this drama is playing out, Robert Willemstad at AIG, he's finally meeting with Gaithner at the NY Fed.
Right, to talk about AIG's problems.
Exactly. He's really nervous about this meeting.
I bet.
He's been digging into AIG and he's realizing how bad it is.
Yeah.
And he's got a plan for a strategic review.
Okay, good. But meanwhile, That Korea deal is dead.
Officially dead.
What happened?
So they have this meeting, Lehman and Korea Development Bank, and he's being super aggressive about the price of their real estate assets.
Okay.
Way more than KDB is willing to pay. And afterward, the KDB chairman tells someone, we have a serious credibility problem with Lehman and their management.
Ouch. So that's it. No deal.
No deal. So